and girls, Nathan here. Thanks for tuning in for Tuesday night lives. Just getting the screens right. Hopefully everyone's having an awesome week. Thanks for tuning in. And as always, I'm going to talk about some fun stuff. So today, what I want to talk about, hey everyone that's joining online, over on Facebook, give us a thumbs up or send us a little message if you can see it all and everything's all good. Today, going to be covering off properties over the years, some of the things that I have seen over the years, some of the deals that I've seen over the years, looking at news articles and getting on with all the usual fun stuff. So if you do have any questions, flick them in the question box and I will answer them in the not too distant future. So getting straight into today's news articles. So something I wanted to share with everyone is the GDP. So if you guys want to look at where we're at the moment, what is happening in the economy, everything seems to be going quite well. Everything's rising and everyone's doing well. Let's go back and understand and look at, if you want to Google it at some point, work out what the difference is between a recession and a depression. I think you will be, quietly excited as to, the definition of it. I don't have my spare phone tonight to read it directly from the phone, but a definition of a depression versus a recession. A recession is 2 declining quarters of negative growth. A depression is a very deep and sharp falling off the cliff of financial markets and unemployment sharply rising. And it can also be defined as 4 consecutive quarters of negative growth. So here we are on the eve of the next GDP announcement. The announcement will be occurring on the 4th. So this Friday, we will see the GDP numbers being released for quarter 4 2020. Looking at where we're at the moment, we saw the March quarter negative 0.3%. We saw the June quarter fall by 7%, the largest that we've ever seen. And let's put that in perspective as to looking at it on a chart. I did share this beforehand. Those blue lines are where GDP is normally. The yellow is how far in the negative it is. So as we can see from that, it has never fallen that badly beforehand. So very, very negative. They will be releasing new GDP figures on Friday this week. I'll be so excited to look and see and observe as to what what they'll be sharing with us. Will all the stimulus be able to save the market? Will they need to create more stimulus to try and stave off the inevitable depression? They're just going to keep printing through this. My opinion is that they're just printing through this. They have shown their hand. They are printing their way through this, and we will see an inflationary depression. Everyone will have so much money they won't be able to afford anything. So really exciting times to be alive. Takes me on to 2 of my next articles, which are quite fun. Bitcoin, cryptocurrencies. What's everyone doing with their crypto? Have you got crypto? Do you understand how crypto rolls? Do you know what crypto is, how it works? And what are your thoughts of how crypto will survive during this time? So just today, as of last night, this article here came out a couple of days ago this is from news.com, talking about Bitcoin. Bitcoin skyrockets, hitting a new record against the Australian dollar. Bitcoin actually hit its all-time high last night while most of us were sleeping in Australia. Bitcoin hit an all-time high of almost $20,000, so which is pretty cool. A lot of people bought Bitcoin at a couple $100. I think I got into Bitcoin, it was about $500 a coin. One of my mates told me about it. I laughed at him, and I didn't know what it was until the day that I actually found out what Bitcoin was. I had, I think maybe I put $1,000 into it, and I was like, shit, this thing doubled overnight, and my money has doubled. What is it? What did I buy? And I realised that it is something that is to, it is not. It could be used as a currency, it could be used as a tool, but it's something very unique. The more money that they print, the quicker that the system will die. So yeah, we've got Bitcoin at an all-time high. We've now got all the major news outlets talking about how great Bitcoin is, how Bitcoin's going to save the day, and basically how high it can go. So looking at Bitcoin, will it go to 100 grand? Will it go to 50 grand? What will be the eventual outcome of that? Time will tell, common sense will prevail. But looking at the level of money that they have printed just in Australia $1 trillion worth of debt this year. Around the world collectively, there's tens of trillions of dollars worth of money that has been printed. We are in a depression. We are going to see the ramification of that over the course of the next decade. I'm so fucking happy that we've got the level of money printing, because some people are going to be losers out of this. Main people that will be hurt will be the people that will be the ones saving and reducing their debt and all that sort of stuff. Debt will become an asset through this. Time will tell, common sense will prevail. I know that I've got haters out there that love watching me and going, oh, Nathan's saying debt's good, it's not, whatever. We'll come back and check back in 10 years' time and see the fallout from that. So really exciting times. Where will Bitcoin go once it goes through that magic 20,000 mark, which it's been sitting and hovering at that level at almost the all-time high for a much longer time than it ever sat there beforehand? We could see some really fun things happening. So keep an eye out on that. Disclaimer, don't go and buy Bitcoin, not recommending it. However, I do own it, and I think it's great. As it goes, got more articles, and our beloved Bitcoin. Bitcoin hits new record, close to 20 grand mark. Bitcoin is winning the word that I don't say, monetary revolution. In Shuggie Bain, Douglas Stewart's award-winning and harrowing deception of alcoholism, sectarianism, and deprivation in post-industrial Scotland, money was always scarce and often dirty. Deserted by her second husband, and unable to hold down a job, Shuggie's mother, Angus, relies on her twice-a-week child benefit to feed her children, or booze habit. As the latter really nearly always wins, she and Shuggie are regularly reduced to desperate expedients to fend off starvation, extracting coins from electricity and television meters, pawning their few valuable possessions, and ultimately selling their bodies for brutal sexual favours. Stewart vividly captures the miseries of Glasgow, of greasy coins and filthy banknotes. After one of many wretched copulations in the back of a taxi, one of Angus' lovers inadvertently showers her with coins from his pockets. Shuggie's father briefly reappears at one point, handing his son a 2 20-cent pieces from his taxi's change dispenser by way of gift, grudgingly adding 4 50-cent pieces. The boy looks non-pulsed. Don't ask for more. Go on and read the article. I'll put it on BirchFeed. Basically, going on to talk about how Bitcoin is, if we look at really where the economy is at, everything's being inflated, right? Just look at the new aeroplane ticket prices, inflated, right? You think everyone would be happy to have, be selling plane tickets. You think that food would be, in a depression, would be cheaper, whatever. Everything is rising. It's not that Bitcoin is so great and it's rising. It is really great. It is rising. But the reason why Bitcoin is rising is just like everything else. It's inflation. You can't keep printing this money. And I think it's going to be really fun to see, coming into the 2021, kind of feels like 2017. However, back in 2017, when Bitcoin hit an all-time high, 2018, sorry, when Bitcoin hit an all-time high in January 18, the difference now is that we're at the bottom. There's a thunderstorm out there. just like what's different this time than last time in when Bitcoin hit its all-time high, we're at just the start of the boom and we're not in a bubble. So it's interesting to see what's happening. Next one, surprise, surprise, we have now seen this article here. This is from the Treasury Ministers meeting minutes. This is straight from the Treasury website on the 29th of November, so this came out on Sunday. The Home Builder Success sees program extended. Joint media release with Honourable Scamo and Michael Sucker. Morrison government is extending the highly effective home builder program, which is driving demand in our vital construction sector and protecting jobs by supporting the construction of new homes and home renovations. Home builder will remain demand driven and will be extended from the 1st of January 2021 to the 31st of March 2021, which is expected to support the construction and major build of around 15,000 homes. This is in addition of the 27,000 homes the scheme is already expected to support, bringing to a total of 42,000 homes across Australia. How many homes would we have been printing anyway? Or I mean, printing homes, right? It's basically what they're doing. Yeah, everyone thought it was going to end. Here it is extended. I think it's gone from $25,000, however, down to $15,000. However, the price caps for new builds will be increased to $950,000, and I think it was $850,000 beforehand. So meaning that they have to increase the price of purchasing because of, the property market is rising a lot. So we've seen massive growth this year. Would it be all because of that? No, but it certainly had a bit of a play on it. So there's lots and lots of stimulus packages and lots more stimulus packages to come, I believe, in 2020. March is going to be one of the favourite times of next year, as we see as head into. So what do we have happening in March 2020? We've got the budget coming out, if they leave it around March, April, May. We've got the end of JobKeeper, JobSeeker, the mortgage holiday ending. We've also got, I believe we'll start to see the interest rates go negative at that point. So it's going to be a very fun time to see around March 2021. I think we're going to see a hell of a lot more stimulus packages being injected into the system. Now, this one here could be very controversial, and we know that I love talking about controversial things. This here is an article. I've been seeing a lot of this recently when you go to so-called websites. This is an article from news.com. Basically, every time I go onto the news, I see something about Australia and China having a fight. If we have a look at this article, Scamo called arrogant for demanding an apology from China. I'm not even going to read the article, but every time you go on news, you will see some form of article somewhere in the news history about China. I remember when China wasn't even a part of the news feed. No one even cared about what was happening in China, right? But every day there's something going on about China, and I want to talk about China today and what will eventually come from this. So strap yourselves in. We've got a fun topic to discuss, which is why all of this is occurring. So I want to take us for a bit of a trip down memory lane. I've talked about this multiple times in the past. As we look throughout history, go back to the early 2000s, if we understand the origins of money, I've actually got two books on the other side of the table here. Jeremy from my office here, he actually brought them in and gave me the books to have a look through. They're monetary books. He's just moved house and decided to give me some books, so it was pretty cool. We need to look at the origin of money and why things happen. So our dollar is backed via petrodollar, which is the US dollar. The US dollar back in 1971, President Nixon did a deal with his friend Henry Kissinger to take the money from where it was, which was based on a Bretton Woods system, and to turn it to a dollar standard, basically meaning that it was backed by oil contracts. If you wanted to trade oil, you had to do so in US dollars, and they made the US dollar the base currency of the world. So everyone had to trade in US dollars. If you took that trade out of it, backing it via oil, it would be worthless. The confidence would be lost throughout that currency, and it would have no value, which it really has no value anyway, but it's just, people still believe, and they're brainwashed and indoctrinated to believe that it has any value to start off with. Looking at some crucial times, going back in the early 2000s, there was two blokes. One was Gaddafi and one was Saddam Hussein. Gaddafi tried to trade oil in gold, and Saddam tried trading oil in the euro. Within 6 months, these two guys were assassinated, their countries were invaded, and they were forced to use the central bank's money. So anytime that someone has tried to trade oil in, or a country has tried to trade oil in another currency rather than the US dollar, they have been violently faced with attack. Back on the 28th of March 2018, I want you guys to understand what is the petro yuan. What is the petro yuan, you may ask? It is basically, I'll go on to read it, and go look at the timeline, go look at what happened. We saw here sort of a bit of a takeover. China tried to move their chess piece, and they tried to do something. It goes to read here, and I actually recorded and documented this as it happened back in March 2018. In late March 2018, the global trade of crude oil recognized a new entrant to the marketplace, a product denominated in the Chinese yuan renminbi. CNY RMB, known as the Petro Yuan, was launched on the Shanghai International Energy Exchange, INE. The first of its kind, the product was a accumulation of 25 years of development and persistence. The decade-long growth experienced by China's economy and equity markets prompted the country's government to present CNY as an international currency. The advent of the petro yuan is widely viewed as an important step in achieving its objective. The petro yuan defined upon China overtaking the United States as the world's largest importer of oil in September 2013. New pressures began to mount for domestic crude oil futures markets. This result was the creation of the petro yuan instrument many industry experts predict will have tremendous geopolitical and financial consequences. The petro yuan is a standardized futures contract available in the trade of the Shanghai International Energy Exchange. It's based on underlying asset crude oil denominated in CNY per barrel. Contract specifications are follows. Goes on to read. I shared this in Birchfeed. Go and have a read of it. And there's a few other articles that are surrounding this. Basically, as of March 2018, the powers to be started to lose a bit of control from their beloved petrodollar and their ruling power as that being the stronghold currency of the world. Unfortunately, for those powers to be, they have to sort of move their power and to do deals and business with the controlling powers of China, because they have more human capital. If there was to be a war, right, people got sent to war, invaded countries, all those sorts of things. I'm not going to get into that conversation today, even though I could have a conversation about it. I don't want to get into that side of it. If we were to go to war as a country, as a global country, if we look at the US, if they were to go to war with China, they have a lot more lives that they can throw away as human capital if they were to go to war, and the US would probably lose. So China has a bit of a control. However, what can they have to lose, which is their money? So that's why we've started to see trade wars. Surprisingly, we started to see trade wars occur from March 2018. If we look back, throughout history, when did conveniently the trade war end? Right? Share with me, guys and girls, when do you think the trade war ended with China? It ended in January this year. Surprisingly, when people started to get sick, right? What happened? Who knows? Who started the virus? Who knows? What's the outcome of it? Who knows, right? But it's interesting. I don't see that on the news. All I see is that every day there's articles coming in with more and more China involvement in this country. Similar sort of things that happen in the US and different nations around the world. Basically, the allies. You've got the BRICS, which is the the new Silk Road that they're trying to build, and new trade partners using Russia and China and all that. When was the last time that you saw a news article that just pops up every now and then about Russia, right? You don't see Russia's news network going into Australian news network, etc. But suddenly we've got China sort of trying to take over, where we are. What does that mean? Do I think China's going to invade us? I've got no idea. If they did invade us, would it be a bad thing? Who knows, right? There's lots of people, they all need a house, so be it. What will eventuate from this? What aren't we being told? It's a power play of fiat currencies. They're all starting to collapse, and I think eventually we're going to see the IMF, the International Monetary Fund, put in a new solution. Year 2021 is in the timeline for what I'm seeing. What we'll see next year, who knows? So just before I get on to some of my cool property stuff over here, I'm going to come on and read some of your questions. So if you've got questions, flick us the messages through and I will answer them for you. David, keep meaning to book in a map session. You know what to do. Look forward to having a map session with you, David. I'm booked out actually. I was speaking to my team beforehand. I'm booked out for map sessions until February next year. At this point, I'm booked all the way up to Christmas Eve of all things. But yeah, have a chat with the team. Call us 1300 367 925. Send us an email at admin@binvested.com.au or flick us a private message from wherever you're seeing this. And my team will be in touch to book in a map session. For those of you that don't know, a map session is a non-financial advice strategy session with myself, working out on how to build a property portfolio and help you navigate through to where you want to be and where you're at to where you want to be. Sometimes they're not always about property. Sometimes people, when they come through for a map session, they're like, cool, I want to build the property portfolio. And they do ask me other questions, whether it be about their business or other sort of things. So they're $495, I believe. So if you'd like to reach out to the office, and look forward to chatting with you, David. Steve, hey Nathan, with responsible lending changing next year, will there be the opportunity to build a portfolio similar size of yours again? Anything's possible. Looking at my portfolio, I haven't seen people with sort of 220, 230 properties. I've seen people sort of give me a good run for my money. Will there be opportunities to build large property portfolios? This year in 2020, I've still seen people build like sort of 10, 12, 15 properties. That's one thing that I forgot to leave out. In March next year, not only do we have all these things that are allegedly ending, and if they don't end, they're going to have to print more money and continue them on, which I'm putting my money on the fact that they will not be able to stop come March next year. There will be more stimulus packages to drive the economy up and try and push forward and get ourselves out of this depression, which we're trapped now, stuck to cheap credit. That will be one of the biggest things that we see come from that in March next year. There'll be relaxation of credit policies and lending policies, which I think will be very beneficial to people. We'll also put a firecracker into the market. I'm going to talk about some of these deals, when the deals were done, and sort of things that have occurred over the years with the property market. So who knows what will happen come March next year on that front. I was thinking as well, maybe the banks might be a little bit more open to sort of gig economy incomes. At the moment they're not recognising Uber and any of those sort of gig economy sort of things, Airbnb, stuff like that. They may start taking those incomes into consideration as a part of their changes they have next year. There will be lots and lots of changes, so it will be exciting to see what comes next year. Angela, hi Nathan, was talking to my agent this morning for some brief housing update. A point have sparked me due to the disease. Finding tenants have been hard because lacking students, holiday workers, immigrants, expat, etc. How would you mitigate this aspect? I actually had 2 meetings with my licensees for 2 of my property management firms today, both of them telling me that there has been massive shift with an influx of people looking for rental accommodation. Looking on the Gold Coast and Brisbane markets, on average, the property rents are sort of rising about 30 to 50 bucks at the moment. Will that continue? I think it will. Supply and demand issues that are occurring out there. Sure, they're not as many sort of students coming in and whatnot. I think as we start to see borders open and things happen, we'll see a big influx of people come to this country, just like people moving from, for example, Victoria to the Gold Coast at the moment. I don't know, I'm making movements here. People moving from Victoria to the Gold Coast, a lot of people migrating to coastal cities and whatnot, has put a big pent-up demand. I think that we'll see people coming from other countries and other nations, and we will need to welcome them into our country to keep our Ponzi scheme alive. So at the moment, I haven't seen any crash. I do think in some sort of capital cities there is some. I did send an email, Steve, with one of your properties which has gone down. Every market is acting different. However, yeah, I haven't seen massive issues. In some instances, markets have gone up and some markets have come down. Some areas come down $100, but all in all, most properties have either stayed stable or gone up. So there's less less vacancy factor, for example, in the markets this year than what there was going back 12, 18 and 24 months ago. So the increase of housing value correlates to increase of population in the past decades, but due to this, wouldn't it be harder for mum and dad investor to maintain the investment till hyperinflation? Good question. The difference between interest rates now and interest rates going back 2 years ago is that we have now seen interest rates. You can pick up interest rates at the moment at 1.99% fixed for 3 years, 2.2, 2.5%. Going back 2 years ago, interest rates were 3, 4, 5%, even more. So, in some areas where impacts have hit us on a rental front, which has been sort of minimal, there has been pickups on interest rates and the cost of holding the asset as well, which is pretty cool. Miguel, hey Nathan team, thank you for your support. Finally made settlement yesterday, many more to come. Awesome stuff, mate. Congratulations, and let's catch up and work out the next steps. Congratulations on getting the property across the line. So if you want to actually, something I may forget, I haven't caught up with my emails today. Maybe if you want to just flick me a quick little reminder on email, I want to go back and see if we can pull some equity out for you and get straight back onto the next one. So how will China's trade war affect our economy, and more specifically the availability of property and the property prices? I don't think it's going to have a major impact. I think that our economy is going to get smashed and we need to print more money. The cost of goods will rise from China making the goods. So we're going to see inflation, we're going to see more money printing. I don't think that they're going to invade, but even if they did, and they did do a deal that involved more people coming into Australia, it would mean a pent-up demand to absorb more properties for us to print and make out. So I use the word printing properties now because that's all they are doing. Getting on to some properties. So this is the exciting part of this evening. Over the course of the last sort of 11 years of running the firm B.Invested and property investment agents, helping out investors, I've seen some really cool sort of stories and outcomes for people and whatnot. And today I want to share with you guys some sort of deals that I've done over the years. I think I've got the years on the back of them here. Yeah, I've got I think that date's a bit wrong, but that's a bit wrong. But we've got some properties here that I want to share with you guys. This here is a block of units that we purchased We purchased this property on behalf of our investors going back in 2013. Picked them up for $600,000. A lot of people think Nathan picks up little shit boxes in Western Sydney and in little regional towns and all that sort of stuff. This property was 600 grand for one unit. There's 6 in the block. This is in Australia's most expensive suburb of Vaucluse. So these units actually have postcard views. 2 or 3 of them have postcard views of the Harbour Bridge. We picked them up for $600,000 in Vaucluse, 2.5 bedroom units. The internal floor space of them was 88 square metres, lucky 88. These properties at the moment are renting for around $650 per week, so not the greatest yield. It's giving a 5% yield at the moment. However, recent sales on other properties currently on the market are somewhere around that $1.5 million mark. So I remember at the time one of our viewers on here, without mentioning any names, actually bought in this complex, and I remember I was actually down at the snow the first and last time I ever went to the snow. It's too cold, don't like it, I'd rather go to the beach. I was at the snow and I was talking to him about purchasing and acquiring the asset, and he's like, oh, this thing here is negative geared. It was negative geared a couple $100 a week, and the reason why we secured the property was due to the fact that I had revalued the property before we bought it, and the valuations came in at $800,000, so it was 200 grand below market value. Those investors bought those properties in Vaucluse. Most of them revalued at $800,000 straight after settlement, pulled out the equity. Equity would have been around 140 grand, and used that to go and buy some positive cash flow property. So that actual person went on to purchase another property for $30,000 that rented for $400 per week, and the positive cash flow from that property supported the one that we bought initially. So in recent talks, I was thinking of that investor potentially selling off and paying off some of their other assets, or using the profits and the proceeds to go and buy some more chunkier assets, be it some cheap unit blocks for around the 500-600 grand to boost their cash flow so they can actually retire from the workforce. So that's a really cool property. This one here is property number 2. This one here purchased in 2012 for my investors. Looking at the numbers here, they were $200,000 per unit. We bought 4 of these as a bulk deal. Looking at medium sales recently, we're looking at $550,000 as per CoreLogic and RP Data says. Around the 550,000. We bought them for 200,000 in 2012. Rental on the property at the time I think it was about $300 per week. I think it's now about $450 per week. So that's a 3-bedroom townhouse, New South Wales Central Coast. Now comparable sales around the 550 grand. That investor bought. We actually bought 8. 2 investors bought 4 each. That has been able to perform for someone's retirement there. This investor, when they came to me, they had one principal place, and then they had their original property that they owned. This investor's now got about 20 properties under their portfolio, and recent chats with them, they can retire if they wanted to today. They're planning on moving up to, without giving away details of people and being too specific, looking to move up to mid-Queensland coastline, and on that front, they can sell off their main property, which we secured as well for them, without going into any details on that one. And they'll be able to be debt-free across their portfolio and have a house on the water in a very good upmarket suburb and income. That was a 2012 property. This one here, another 2012 purchase. It's a 2-bedroom unit on the Gold Coast. At the time, if we look at the markets, they're not all in line with each other. So if we look at going back in 2008, the Queensland market was booming. If we look back in 2008, the Sydney market was just coming out. The market had crashed between 2003 and 2008. The market had started to recover when the GFC came through. The Sydney market took off from 2008 to 2016. However, the Queensland market, Gold Coast market, was going backwards. Everyone said it was a shit time to go and buy properties on the Gold Coast, 2-bedroom unit. I believe that this owner of the property was recently offered $500,000 from a developer to buy their unit. The purchase price here was $159,000. Rental on that, I think it's getting about $320 per week. So $320 a week. Purchase price $159,000. Without the developer aspect to it, the property would probably sell for around the $280,000 to $320,000. So different properties at different times all have formed a part of different investors' property portfolios. This property is probably one of the funnest sort of properties of 2020 that I've bought for someone. This is a unit. It is a 39 square metre unit that I've secured for one of my investors. I bought it in February this year, before our lovely reason for crashing the market had occurred. This property we purchased for $18,000. It was a 39 square metre unit. Purchase price was $18,000. These things, other properties in the same complex had sold for about 180, so it's about 10% of the value. Could I buy another one of these? No, I just missed out on one for $30,000 for someone else. There's others in the block for about $65,000 for sale. This thing here rents out for about $110, $120 per week. So it's a good, good little cheapie. $18,000 is probably cheaper than half of your cars. And that was a property that was purchased in 2020. These properties that I'm sharing with you guys today have been bought at all different times, in all different locations, at all different parts of the country. At every year, sort of since I started signing a contract, I've noticed, one of the things I've always noticed is that there's been markets that have been going up and there's markets that have been going down. So in about 2016, that all changed. And I remember at the time people were laughing at me, talking shit about me and saying, Nathan, you lost your plot. Like, why would you say that all property markets are going to go stable? Why are you saying that all markets are going to crash? Why are you now saying all property markets are going to boom and increase? It's because they're all manipulated. And they've been manipulated for a very long time, but it's more and more evident today. So if we look at markets, so if we go back to 2003 to 2010, what was happening? If we look at the Sydney market was falling and collapsing from 2003 to 2010. It went backwards. It started to recover about 2008, 2010 before we saw the boom. If we look at Queensland, the market had taken off and we saw big growth, and the market crashed around 2008 to 2010. If we look at Melbourne, Melbourne was in a very similar spot to Sydney. If we look at areas like Perth, and we look at areas like Northern Territory, they were doing quite well during that period of time. So areas of the country were crashing and areas of the country were booming at that period of time. We start looking at the last 10 years from 2010 to 2015. Sydney took off, Melbourne took off, Perth crashed, Northern Territory crashed, Queensland crashed a little bit and started to recover and basically was sitting at where it was from 10 years prior. We look from 2016 onwards to about 2019, all markets started to fall off from their peaks, from the peak to trough. And in around June last year, June the 4th, that we saw the interest rates drop by 0.25%. By September, October, we'd seen 0.75% removed, or half the interest rate had been removed, and we started to see the market take off. And since then, we've seen great growth in a lot of these markets. So markets at the moment, if we look at Sydney, there's sort of a split market. Some areas are going quite well, and there's a very short supply of stock. Some areas are, a bit soft. If we look at areas like coastal and lifestyle locations, there's a lot of growth happening in those areas. If we look at like just the central coast and south coast of Sydney, there's probably been about $100,000 to $150,000 increase over the course of the last sort of 3 months, 6 months. So that's sort of like a 10, 15%. There's actually a property, I wish I had pulled it up. Property I just settled for someone that they paid $380,000 for a house on the Central Coast, and their personal situation has changed recently, so we've got to wait till the new year for them to get finance. However, that thing, if we hit it up for refinance, probably revalued at about 550 now. So, yeah, there's been some really big movers this year. If we look at areas on the Gold Coast, Brisbane, all the way up to Cairns is booming. Basically the whole of Queensland's booming at the moment. If we look at Perth's booming. Look at Adelaide, even Adelaide's booming. Melbourne, speaking to a lot of people from Melbourne, everyone from Melbourne loves chatting to me at the moment. Melbourne's moving, right? Everybody's leaving Melbourne, but yet Melbourne's going up in value. Why is that? Right? Is it because everyone wants to live in Melbourne, or is it the fact that money is so cheap and everyone's being suckered in via the home builder, 2% interest rates, not being able to get a return in any other sort of financial market apart from property or Bitcoin? Like Bitcoin and cryptocurrencies have done great, but when they have bad days, they fall in half and fall in quarters and whatnot. And Bitcoin, from my perspective, what I see is actually is becoming a very credible investment, especially in times like what we're seeing at the moment. So it will be interesting on that front. But looking at the property market, even Melbourne property prices are on the rise. So yeah, very, very interesting. And I think that 2021 we're going to see massive growth across a lot of property markets. So that's going to be exciting. This property here was bought in 2012. This area was a shithole back in the day. This was, for those of you that live here, apologies, but this property here was one that we secured in Schofields. This was a house in Schofields. For those of you that know where Schofields is, a block of land of like 250 square meters is probably $500,000 now. This house on land we purchased in 2012. It's on, doesn't have the land size here. I'd say it'd be about a 600 or 700 square meter block that we secured. It's renting for $415 per week at the moment, and we bought it for $280,000. Looking at recent sales, other properties currently on the market probably worth somewhere around $800,000. So that person's tripled their money over the course of the last, 8 years. And we've seen a depression, we've seen a recession, we've seen money manipulation, we've seen a boom, we've seen all different things, and the property is still up 3 times what they paid for it only 8 years ago. So if you had to put down a 20% deposit, let's just use these as an example, right? If you had to put down a 20% deposit onto this property at $280,000, that would have been less than $60,000, $56,000 for a deposit for this property, and it would have gone up $500,000, right? So you would have 10x'd your money, plus you've got all the benefits of owning a property and all the leverage and all the rental income and all the cash flow along the way. This property here is a 2-bedroom unit. It's a very attractive unit in southwestern Sydney. Some of you guys may remember this sort of property. This one here was bought somewhere around the 2015 period, 2-bedroom unit in Sydney. Purchase price was $196,500. So $196,500 probably rents for about $320 per week now. And other properties that are in the market somewhere in that $320 to $350. And at one point I remember seeing these things sell for $400,000. So not bad when all the markets are crashing around Sydney and people still making money. If you just had like 10 of these properties in your portfolio, I'm sharing with you guys today a dozen of these properties just for the fun of it. These properties, if you had a dozen of these things, that would be your retirement. So that's where the opportunity lays. This one here is really cool. This was a block of units that I secured for someone. Paid for this $205,000. It's a block of 6 units, these 6 units. It is now currently for sale. for $690,000, and rent on it is about $1,100, $1,200 per week. So $1,200 a week, 210,000, 205,000 for this property, and is now on the market for 690,000. This properties, I actually did 5 deals this month, which were very similar to these ones, in other very different locations. Where I'm picking up stuff for between sort of 350 and 550, 600, and these things that I'm picking up today used to sell. So I'm picking up stuff today in the market for like, one of them was $600,000, and you get 5 units with it, 5 2-bedroom units for 600 grand. That's sort of like 120,000 per villa. But back in the day, these villas were selling for about 400,000 each. So if the markets where we're picking them up at recover, then we will be able to see these properties go up sort of 4 times with very little sort of effort. So are the deals out there in the market today? Yes, they are. This one here is a bulk deal. It was a brand new property in a very prestigious location. This property is actually located in Mount Coolum. For those of you that know where Mount Coolum is, it is up near Noosa. Don't normally go to buy, if you look at these properties, they're all different sorts of properties. Some are houses, some of them are little cheapies for like $18,000, some of them are $50,000, some are blue chip properties in Sydney, some are Western Sydney straggler properties. This thing here was a bulk deal. We bought about 15 of these properties. This one here, you can see it's actually got a rooftop balcony, so it's like a 2-story unit with a rooftop deck with about 180 degree, 270 degree views. Some of them had 360 degree views. This one here was purchased for $330. I think they were $230 for 1-bedders, $330 for 2-bedders, and $370 for 3-bedders. I bought 2 of them in this complex. My investors bought 1 or 2 each. There was about 20 of them that we purchased at the time. I just recently asked an agent what he would sell my 3-bedder for. He came back to me and said $800,000. Looking at previous sales in there, one identical to my 3-bedder had sold for I think $2.2 million when they were built. This was back in 2014. So we picked this up in the bottom of the market. So 370 to 800, 850. I thought that the agent's too light on the price, but it's an interesting time out there. So that thing, Moen actually, the rent on it has just gone up from $570 per week for it. I paid $370, and it's done nothing to it. It's new. It's got depreciation. I think I owe like $300 on it or something. The rent's just gone up from $570 to $690 from memory, $680 or $690. So it's gone up about $110, $120 pretty much overnight. The last tenant moved in. The last tenant moved in there in March, and this tenant moved in just recently. This property here is a house that we bought down in southwestern Sydney. Purchase price was like 225 grand. Rent on it's probably around the 350, 400 per week. It's on 1,400 square meters of land. Try finding 1,400 square meters of land for 225 grand in Sydney. This thing here, it's like 7-8 years ago. Looking at little blocks of land, you could probably split this into 3 blocks. The land's probably worth sort of 400 grand a block, 350 grand a block. So just as a land content that we paid 225 grand, this property here would be somewhere around $1 million just in land. Very, very cheap at the time. It didn't look so cheap. It was like, oh wow, that's cool, whatnot. But lots of money to be had. This one here is one of my good mates' properties actually. I did a video with him out here maybe 6 months ago on my personal Instagram page. I just did a quick video with him. Which was driving through the area. This is in Foster on New South Wales mid-north coast. Bought this one about 6 years ago for him. At the time we paid $137,500 for this property. It's a 2-bedroom townhouse in Foster. based on recent sales and other properties currently on the market, probably looking around that 450,000. So this guy here has tripled his money. You can see why I'm good mates with him, because I make him lots of money. So that guy there, that was his first property that I bought for him. He's now got, I think, 12 properties in his portfolio. Obviously, leveraging and using these assets to perform certain tasks. This property here, this one here, is a resort property. If you ask me about regrets, this is one hell of a fucking regret. So I bought 3 properties here in this complex. 3 properties. I bought them for $35,000. So 1 I bought, 2 my clients bought. So most of the deals when I buy these things for my investors, I buy stuff that my investors buy. This is a unit. Guess where it is? Has anyone seen the Candyman? That guy, the guy with all the chicks, whatever. He lives in his mansion in Hope Island on the Gold Coast. This property here I bought 2014 in Hope Island in the Gold Coast, right? Mansions, right? Mansions. Expensive properties. $35 fucking $1,000. 35 grand, right? My investors, I charge them a fee. They pay me a fee. I buy the property for them. 35 grand. I bought one. 2 of my investors bought one each. 35 grand. I sold mine, not because I wanted to. I need to raise capital. There's been times in my life where I've had to sell properties. Around 2000, I had this one for maybe a year or so. I sold it for like 75 grand. I was like, look, I just doubled my money. It's like putting it all on black, but I was getting $250 a week rental in. And I bought this thing cash, sold it for 75 grand, whatever it was. Now they're selling for $200,000 in there. 200 grand, 5 years, 35 fucking $1,000. 35 grand, Gold Coast, mansions around it, Hope Island. Go check it out. There's for sale at the moment. So, yeah. This one here was done. Let's not look too. I don't want to share too much on it because we might see through it. This property here is a townhouse that we purchased. This property here, I'm going to unfold it. It's like and the winner is for the Logies. Just unfolding it like it's a this property here is in Brisbane. Purchased this property in November 2019. November 2019. This is a 2-bedroom townhouse. We bought it for a grand total. This is 25 k's from Brisbane CBD. 122 grand. 122 grand renting for $270 per week. So there's a dozen properties that we've bought over the last sort of 7-8 years. Different properties, different locations. If someone had a portfolio of all those properties, they would achieve different tasks. They would achieve different outcomes. Those properties wouldn't all be suitable for the same people. However, they've all done really well. There's I've been a part of over 10,000 property transactions over the last sort of 15 years, and bought properties in every corner of Australia, every sort of type of property. At the moment, been picking up some big blocks of units for people, been picking up some little properties in Sydney for like 280 grand, picking up properties in Gold Coast and Brisbane still for under 200, 150, 180 grand, 200, 220, picking up blocks of units in Queensland for sort of a couple of hundred grand. Some very good buying out there. The markets have all moved. Everything's booming. Doesn't matter what area of the country we're looking at. There's a lot of areas that are booming at the moment. So can you build a portfolio in 2020? Can you build a property portfolio in 2021? I know dozens of people which have built 6+ properties, gone from 0 to 6+ properties in 2020. Will you be able to do this in 2021? I believe so. I believe maybe for the first half, second half of 2021, it will be good buying out there. It's a very similar market to Sydney back in the sort of 2008, 2009 time. Bit of uncertainty. all those sorts of things, but so much stimulus packages, so much money printing and money creation and grants. Like going back in 2008 when the market took off, they made a $14,000 homeowner grant. That was insane. 14 grand just for buying a property as a first home buyer. I remember a girlfriend at the time, I got her 2 properties and she didn't even put any money down. So look, it's looking at the market at the moment, there's grants out there, 25 grand to buy a property, free stamp duties, all these incentives. They keep printing them, they keep making the money cheaper, they keep making the entry barrier easier to get into. Really exciting time. So I sit there and I think about my little measly $70 million property portfolio and I think, imagine what it'll be like when the market doubles. Imagine when the market goes and triples, quadruples, right? This is going to be getting me to my billionaire status. So add in there some of the motels and different things that I've been buying recently, shopping centres, some more strips of shops that I've been buying. They all sort of add up. So on that note, got questions, flick the questions through. I'm going to answer some of your questions now, guys. Okay, cool. Keep tagging your mates and I appreciate you guys that are sharing the videos. Notice that I'm getting shadowed banned tremendously now. Whether they're liking the content that I'm putting out or whatnot, I'm trying to keep it a little bit more mainstream. I put all my crazy stuff over on Birchfeed. If you're not on Birchfeed, go to birchfeed.com. But I do feel that we're being shadow banned. If you can share the videos and invite your mates to look at it and all that sort of stuff, that would be great. David, do you think the stock market is a forward-looking indicator for property? Looking at the stock market, I have still got zero money invested in paper markets. I own lots of cryptocurrencies, I own lots of metal, I own lots of infrastructure, I own lots of property, I own lots of business. However, I don't have my money in the stock market. It doesn't sit well with me. It'd be like going to someone that is a healthy person and saying, go drink alcohol. It is not in line with the person that they are, so they wouldn't do it. So I'm not personally invested in the stock market. I have been slightly wrong on a few certain things this year, which have taken me by surprise, which has been, I expected the stock market to crash, right? How come the stock market has hit all-time highs, right? If this isn't fraud, if this isn't a Ponzi scheme, why is the stock market hitting all-time highs and we have got a depression going on? We've got insolvent companies everywhere. Why is the market still increasing? That's the question I ask, and that just doesn't sit well because we've got these zombie companies that are time bombs. They're about to implode, and they've got the highest valuations ever. They've got no yields coming in on them. There's too much risk for my personal thoughts surrounding that market. But looking at what happened in Venezuela, the most best performing stock market in the country going back 3-4 years ago, and I shared that with you recently, was Venezuela, and the reason being is that their currency was hyperinflated and everything just went up in value and looked like they had these massive growth. But if you took that back out and converted it back to US dollar as a base currency, it was probably one of the most worst performing stock markets in the history. So we have got massive inflation going forward. I'm not invested into it, so that's my non-financial advice. Mark asked here, Nathan, pros and cons of NDIS houses. Firstly, I think that if everyone starts taking these things, right, and getting the treatment that they're trying to force everyone, we're going to need more NDIS because there's going to be lots of disabled people from, being poisoned out there. So that's my little joke when anyone asks me about NDIS housing. Do I have any investment in there? No. I look at it as one of those schemes. They call it the NDIS scheme. Is it something to look out for? Is there money to be made? I'm sure there's money to be made, but I look at it like those NRAS schemes, and there's been lots and lots of schemes over the years. The reason why I'm not invested into the NDIS is one, it's too hard of a strategy. Like, I've got a strategy that works. It's like saying we're going to go to McDonald's and McDonald's going to serve some fine dining. It's not in line with their strategy. For me, I like picking up properties that have low market value, upside for capital growth, and a strong cash flow. When I look at NDIS, yes, they have got strong cash flow, but there's also a lot of risk because you've got a very small market. I look at them like I look at hotel rooms, I look at them as I look at student accommodation, retirement villages, over 55s, those sorts of properties. There is an element of risk that's there. People might sit there and say, well, look, it's just a normal house that they're building, but there's a few changes where you've got like some handrails in the bathrooms and stuff like that. Yes, that is one argument to be had, but the people that are building these houses are charging exorbitant premiums. How would you go to the bank to pull out the equity? How is the property going to get you to where your goals want to be, where you want to be with your goals? So that's the ultimate question I always ask to myself, and I ask everyone to ask themselves that question. If you're going to buy a property, how is it going to help you reach your goals? You go buy a property that's NDIS, what's it going to do for you? You're probably paying above market value. Your market for it to go up is very limited because it's a very specialised sort of market. There's so many people pumping these things, so there's a wash of these properties out there. Growth, I believe, could be limited and it could be over market. So it's really only ticking the box from a cash flow perspective, but there's too many other elements of risk that are surrounded into the deal. So personally for me, I haven't got any. I have no intentions of building any. If I was going to build them, I'd build other sorts of properties. So I am actually going to be doing 2 developments in Queensland in 2021. I've got them which I'll be sharing with you guys over the course of next year. They're just going through council at the moment. One is a realignment of boundaries and fences, and I was going to knock over a whole street of houses, but instead one of them burnt down. I'm going to enter through the backyard of that property and develop 4 houses in the backyard, build 4 houses. I'm going to remove houses and probably add double the value of the property just by adding all these new dwellings in and doing a subdivision. So I'll be sharing that next year, as well as a very large industrial complex that I'm looking to build, possibly up to 96 industrial sort of properties on the one side. It's 22,000 square metres of land. So I'd rather put my cash, if I'm going to be building stuff, into stuff that I'm going to see a lower risk and a much greater return. But I'm not a property developer. I'm just building to maximise my yields on my properties as well. And I can see that there's an exit strategy. If I was to build these things, I could sell them and make massive profit. So I want to make sure that in the worst case scenario, I'm still making lots and lots of profit. And I'm not building an overinflated sort of asset that's got a minimal market to go to. Jeremy, well done, mate. You're a winner. You will be up there flying in the Mile High Club soon enough. I don't fly, unfortunately. It sounds like fun, but I don't fly. Stefan, I live on the Gold Coast and I'm a first home buyer. I've found the market has gone up dramatically recently. Any advice on getting into the market up here? The Gold Coast has moved a lot recently in 2020. There's a lot of, I always said, and you guys can go through all my videos from over the years, that when we see the markets take back off again, because I said back in 2016, it's the end of the market's going to plateau off, maybe go down a bit, maybe go up a little bit, it's just going to go sideways, it's going to happen nationally. I said when we start seeing the market take off, the best place to go up in value would be Brisbane and the Gold Coast. That's why I've been taking videos there for over the last sort of 5-6 years for you guys. I bought up very heavily. I'm not buying that much there. I'm buying in other places. And today when I buy stuff, I don't actually share where I'm buying. I buy for my investors. They second me to act on their behalf to locate and negotiate properties. I did see a message over here on Instagram from Muns28. Got any property deals going now? I'm always working on deals, always got hundreds of offers out there. I do lots and lots of property purchase for all my investors. I locate the deals myself, negotiate them myself, and build their property portfolios for them. So if people need help obtaining assets like these, that's what I probably specialize in more than anything. I like talking about the economy and like sharing with you guys this data and knowledge and the things that I'm looking at, because it's what I look at on a daily basis now to see where there's things that are coming thrown my way and what's the opportunity and what is the risk that's around it. The Gold Coast market is very hot. I think it will go up a lot more. I think there's going to be a lot of growth across the region. but it's not a market that I'm heavily going all in. I went in when the market was sort of depressed, but there is good opportunities out there. I'm still picking up properties that are sort of 250 rent for 400 a week. I'm revaluing those properties. So just this last month, I've revalued about 3 properties that have only settled like a month ago for my investors for 40 to 60 grand equity extraction from them. So there is still opportunities out there, but those opportunities are missing out, like sort of closing in on. So if you'd like, Stefan, reach out. Happy to point you in the right direction, have a chat to my team, and we'll go from there. Andrea, hey Nathan, could you do a back to basics about starting the property investment journey? I have a few friends that are just starting out and have started watching you. I've already sent them links to some of the YouTube you filmed. I could. It's a good question, Andrea. I can see that my team is on the live tonight. I'll put that as I'll do some whiteboard sessions, 2021 updates. I'll do them maybe the first quarter next year. I'll do a few sort of video series and put them out there on YouTube. But there is a lot of how to get started videos on the B.Invested YouTube channel. I look much younger, much trimmer, less grey hair, and all that sort of stuff back in the day. And yeah, there is a lot of videos out there, but I will do a retake on 2021. So Prashant, do you have a price target for the next Bitcoin run? I don't have a price prediction on it. I gave up predicting Bitcoin price many years ago. I think that we could see it go exponential, not giving any financial advice, not telling people to go out and purchase Bitcoin or cryptocurrency. I'm very heavily invested into it. As I said, I've got into it since it was like $500. So, you know, when I say that my thoughts on it is based on my views and my eyeballs that I look at the market. I think at 27 grand Aussie, it is very expensive, and it's not something I'd see myself going all in and throwing a lot of money at. At 27 grand, that's a property deposit, but it does have the upside. You could get into Bitcoin at a fraction of it. You could spend $100 and get into Bitcoin. There are altcoins out there which, you know, are very volatile as well. But yeah, as for where it could go up to, you know, 50 grand, could go to 100 grand, could go to hundreds of thousands. I do actually believe, heart and hearts, that Bitcoin will reach the 7 figures one day and will hit $1 million per Bitcoin. I do believe that. You know, people might call me crazy. I'm not out here to spruik Bitcoin and cryptocurrencies. I do love when they go up. I'm a buy and hold, a bit of a lazy investor on that front. Plus, I do mine my cryptocurrencies as well, and that's my other sort of side project, which I share on my personal Instagram and social media channels from time to time. So just on a few housekeeping thoughts here for everyone as well. What I've put out this year, I've put out a lot of content coming here every Tuesday for you guys, you know, sharing with you what I'm seeing in the news, sharing with you what I'm experiencing out there in the market, you know, giving you my thoughts, walking through the scamdemic. Sometimes it does become a little bit more of a question of what do you guys want to see from me, because, you know, there's lots of news. I think everybody knows now the government's a lie, the media's a lie, we're getting screwed over, the monetary system's a fraud, things don't add up, and you know, I've explained that enough times out here, and I think a lot of you guys and girls watch me based on that. Moving forward, I want to get feedback from the community as to what you'd like to see me talk about in these Tuesday night sessions. So maybe if you guys could either flick us an email at admin@binvested.com.au, leave messages below, flick us private messages. Emails are best because then my team can pick them up at admin@binvested.com.au and be able to print them off, and I can plan and schedule what topics I could talk and share with you guys about. So if you could share that, I'll produce content that you guys want. Andrea may even be able to do that on a Tuesday night live session, so I'll think of a few different things as we come towards the end of the year. If I can do it at the end of this year, great. If not, next year. I will be doing these lives and ad hoc sort of videos over the Christmas and New Year period. I will be doing probably a lot more videos. I'm going to be out on the road a little bit, sharing some content. So do keep watching in over the New Year's time. As a final little final thing for this evening, as always, birchfeed.com, go check it out, it's free, don't be a tight ass. Tomorrow night I'm going to do a webinar with Bo Chase from my office. Bo Chase is a mate of mine and also a business, I don't know what you'd call him, like a business consultant, helping people out with business and whatnot. And I thought I'd get him on to talk about goal setting, planning and structure. When it comes to property investing, I think it's important to treat it like a business, structure it like a business. So I'm going to get Bo on live with me tomorrow night for a webinar. The link is in the description. If you don't have it and you can't see it, my team will share it with you guys and put it in the comment section on Instagram and Facebook. But I have a webinar tomorrow night. We'll be talking about goal setting, goal planning, and planning to make sure that you've got the best year of your life in 2021. So make sure that you check in. It'll be 7 o'clock tomorrow night. And yeah, look forward to seeing you there. And on that note, I'm going to jet. I'm going to go and weather through the storm. I believe I've got a blackout at home, and I need to go get some food. So I'm going to go get myself some dinner. We'll catch up soon. Thanks for watching, and I will see you next Tuesday, or if not, tomorrow night. Bye for now, guys.